In this video, I'm going to tell you where the market believes interest rates will be heading in 2025 and beyond in the UK. Now, if you find this video useful, do make sure you hit that like button, but also subscribe to the channel. Now, I'm going to pull up a chart on screen, which you can see now. This chart shows you where the market thinks the Bank of England base rate will be over the next 5 years. So we're talking about 2025 all the way through to 2030. And of course, this will influence savings rates and mortgage rates in the UK. Now, each line on this chart represents the predictions that were made on a given date. So you can see the light blue line there is the prediction that the market was making based on overnight swap rate back in August 2024. We've got predictions all the way through to the 8th of January 2025. This gives you an idea of how the predictions have changed. So if you look back in August, you can see there that the market was predicting that the base rate would fall quite quickly into 2025, probably be heading to about 3.6% by the end of 2025, and then would ultimately fall below 3.5% by the end of 2029 as we head into 2030. But there's been a significant change in the market's predictions, and you can see now, concentrate on the green line. This is where the market currently thinks the base rate will be. It actually predicts that we're probably only going to see about 0.5% fall in the Bank of England base rate over the next year, and ultimately the base rate won't fall below 4% in the next 5 years. This is a massive shift in the last few months, and it's largely down to the market's concern over policies that the UK government may be implementing in the future and the borrowing as a result of the UK budget. There are other factors involved, of course, but the main thing is rates are predicted to stay higher for longer. Now, that is good news for savers, but it's bad news for people who want to remortgage or take out a mortgage in the coming months and years. So with mortgage rates predicted now to stay higher for longer because of the base rate staying higher for longer, it does mean we've seen deals creep up. So the interest rates you're getting on the best deals in the market have started to creep up since the last time I did this video back in August. Now, to emphasize the point and how much that's bad news for mortgage borrowers, I'm going to go through some of the latest rates that are available in the market for people in the UK. So this article on the Money to the Masses website, I've put a link to the article in the notes of this video so you can go through and read it at your own leisure. We do update the tables of the best mortgage rates in this article twice a week, so it's worth bookmarking and going back and checking them regularly. If we jump down, we look at fixed rate deals, we look at tracker deals, we even look at buy-to-let deals in here. If we look at the 2-year fixed deals first of all, you can see that the best rate out there is about 4.16% if you've got a 60% loan to value, but that rate creeps up to 4.98% if you've got a 90% loan to value. That is a significant jump. If you go back to the third quarter of 2024, we were seeing mortgage rates starting to fall. But because of the chart I showed you earlier where the market's predictions of where the Bank of England base rate, which influences interest rates in the UK, where that's going, and that's going to be higher for longer, we've seen mortgage rates jump. So just looking at the numbers from last time, the best 2-year fix was down around 3.84% in the autumn of 2024. You can see that's a jump of about 0.32%. Similarly, if we look at the 90% loan to values for a 2-year fix, back in the autumn, you got 4.85%, which is actually 0.13% lower than you can get now. Jumping on to 5-year fixes, it's a similar story. So with a 60% loan to value, you're going to get about 4.06% as the best rate out there. For a 90% loan to value, you're looking at 4.5%. That is markedly higher than what we had in the autumn. Back then, we were looking at 3.68% for a 60% loan to value and a 4.37% for a 90% loan to value. So again, similar jumps that we've seen since the autumn in mortgage rates. It's not good news, unfortunately, for mortgage borrowers. Moving on to tracker rates, we have seen tracker rates fall slightly, and that's only because we saw the Bank of England cut the base rate in November from 5% to 4.75%. So we've seen a slight fall in tracker rates, as you'd expect. The best ones out there at the moment for 2-year tracker deals is 4.69% for 60% loan to value. The others you can see on screen. Like I said, do check this article regularly because they change all the time. We've started to see some lenders cut rates marginally, But unfortunately, the trend that we've seen since the autumn is for mortgage rates to go back up again. So if you're looking to remortgage in 2025, you do really need to keep abreast of what's going on, because they aren't falling as quickly as people thought. Of course, if we see something like a recession, then the Bank of England may be forced to cut interest rates, and that would lead to savings rates falling and probably mortgage rates falling too. As I said at the start of the video, if you found this useful, please do hit that like button, but also subscribe to the channel so you make sure you keep up to date with what's going on in the mortgage market.